In this video, I'm going to be doing chapter 6, numbers 16 and 17. I'm going to be doing the transactions here and showing you the difference between recording invoices using the gross amount and using the net amount. So what we're going to do, I'm going to split this in half. And on this side, we're going to do the gross. And on this side, we're going to do the net. So it's going to be the same transactions. On one side, we're going to do the gross. The other side, we're going to do the net. So let's get started. October 2nd, purchased merchandise at a $4,300 price. Invoice dated October 2nd. Terms 3 of 10 and a 30. So we're going October 2nd. The journal transaction here for the gross is going to be merchandise inventory. We're going to debit that $4,300, and we're going to credit the accounts payable account for $4,300. However, for the net, I'm going to remind everybody this October 2nd transaction, the terms are 3 of 10 and 30. So therefore, when we're doing the net, that merchandise inventory, we're going to take out that 3%. So that merchandise inventory account is going to be for a debit of $4,171, and the accounts payable account is going to be a credit of $4,171, because we're going to take out that 3% up top for the net. Now let's go to the second one. It says received a $500 credit memorandum at full invoice price for returned merchandise that it purchased on October 2nd. So on October 2nd, they returned $500 worth of merchandise. On October 10th, they returned $500 worth of merchandise. So if you're doing the gross method, we're going to debit the accounts payable for $500, and we'll credit our merchandise inventory account for $500 for the amount that we returned. However, remember, on the net, we took the discount initially. So therefore, what we need to do here on the net side, if we were going to record, is to record the accounts payable at its discounted rate, because we recorded it at its discounted rate. So we're going to record it at $485. That's with the 3% discount, and the merchandise inventory will be credited for $485 because we initially put it in at its discounted rate. Going on October 17th, the company purchased merchandise for $4,700. Invoice dated October 16th. Terms 2 of 10 and of 30. Now, this is an October 17th transaction. On the gross side, we purchased the material for $4,700. We're going to put the transaction in the books for that $4,700. Credit the accounts payable, $4,700. Now, on the next side, we're going to record that transaction. However, we're going to record it with the discount. The terms are 2 of 10 and 30. So on the net side, we're going to debit our merchandise inventory for the amount of $4,606. And we're going to credit accounts payable for $4,606. That is the amount minus the 2% discount going on. October 26th, we paid the merchandise purchased on October 17th, less the discount. Okay, so we're going to pay off that bill that we accrued for on this date. Now, when we're doing the gross amount, remember, we didn't take the discount initially. So here on the 26th, this is when we're going to take it. So we're going to pay off that accounts payable account. So we're going to debit it for $4,700. Now, we're going to credit two accounts. The first account we're going to credit is the merchandise inventory account. Why are we crediting that? Because we did not account for the discount. Now we're taking the discount. We're going to credit it, the $94, to account for that discount. And we ended up paying the vendor $4,606. That is the amount initially owed minus the 2% discount. Now, that's for the gross. However, on the net side, we've already taken the discount. Remember, here it is. So now that we paid within the discount period, we're just going to debit the accounts payable account, $4,606, and credit the merchandise inventory account for the same amount. Now, finally, on October 31st, we're going to pay for the merchandise we purchased on October 2nd. This transaction here. Paid on the merchandise inventory October 2nd. Payment was delayed because the invoice was mistakenly filed for payment today. This error caused the company to lose its discount. All right. Now, when you're using the gross method and you make a mistake and you do not pay within the discount period, there's no effect. So you just debit the accounts payable for the amount that you owe. On the amount that you owe. Now remember, on the gross side, on that October 2nd invoice, you initially borrowed for $4,300. However, you got a credit memorandum, for $500. So that means you only have $3,800 on account that you owe. So you're going to pay the accounts payable of $3,800, and we're going to pay that in cash, and that's $3,800. Now, the difference is going to be on the net side. Remember, you took the discount. See here? So, due to the fact that you paid too late for the discount, now you have to make an adjustment for that discount. So, your accounts payable is going to be $3,686, and that's because you're going to debit an account called discounts loss for $114. And finally, you're going to credit your cash account for the $3,800 that you're going to pay the vendor to complete the October 2nd purchase. Here. I hope this helps. Have a great day.